Hello, my name is Chelsea Boss, and I'm the Assistant Director here at the Adrian District Library. So thank you all for being here with us this evening. Just a couple of housekeeping things. In the event of an emergency, there is a staircase in this back corner that'll take you up to the front of the building. Staircase this way that'll take you towards the back of the building. If you need to use the restroom or get a drink, we do have restrooms out here in the alcove, and as well as a drinking fountain and bottle filler. So, at the end of the program, we do have program evaluations. If you're willing to fill those out for us, we would appreciate it. And you can put any suggestion for future programs on there as well. So without further ado, I will let the program begin. We have Fran, Michelle, and Bill with Premier Bank here with us this evening, and they're going to talk about some of the different loan options that are in the community. And we also have Joaquin Ramos, who has lived experience and who has used some of these and benefited from them. So we will get started. This is Joaquin.
Hello, everyone. Welcome. Welcome to our program. And thank you all for attending in person and Zoom. And of course, if you're here in person, we do have some pizza. Thank you, Premier Bank. I'll figure out how this works. Don't worry about it. So I'm Joaquin Ramos. I'm the coordinator of this event. The content will be mostly provided by Premier Bank with Fran and her team. And of course, the Adrian District Library is allowing us to use their facilities and their Zoom. And thank you so much for that. They've been great helping put this on. I originally started to set up this event under the banner of the HRC. The city had a couple of miscommunications, so that is why my name appears on it, and why it's under my banner. But I do want the HRC's done this in the past, and it has been a great program. That's actually how I was introduced to it. So I hope you all find benefiting this today. I'm going to start a little bit with my experience, and then I'll be turning it over. So first, I'm Joaquin Ramos, and I'm a City of Adrian resident pretty much my whole life. By half that time, I've spent housing insecure and a couple of times eventually homeless. About 4 years ago, when I was serving on the HRC, which is specified as the Human Relations Commission of the City of Adrian, I was serving on the HRC. We put on the home ownership seminar with Fran and her team at the time, First Federal, now Premier. And not long after we put on that event, I found myself homeless again. And this started, and my mom and I started the process of the community mortgage loan. Of course, this took time. It was rough, couch surfing, remaining active in various groups and running. But due to Fran's expertise and some fortunate things, we were able to move through fairly quickly. Of course, others might go through faster, but it was actually fairly fast. Of course, this did mean as we got through the process and being eligible, there's a looking around at various houses and, of course, a desire to just hurry up and get housed, but also wanting to find somewhere where we'd be happy with to make the most out of this loan so that we can be somewhere where we're happy. And of course, eventually we did find somewhere. Again, thank you so much for offering this program so that we could get that house and start getting things in order. Of course, later on we did apply for the improvement loan as well. Thanks to this program, all of it really, I went from on the streets to housed and to improving my house. So I'm incredibly thankful this exists. And once again, thank you, Premier Bank. I'll be turning it over to Fran and her team.
My name is Fran. This is Bill with Michelle. So we're going to talk to you a little bit about a specialty program that we have at Bank here. It is a program, you probably hear mortgages, things, and a lot of people are very familiar with conventional loans. Those are the loans that you hear about that, some people think you need 20% down, but 5%, 10%, 15% down through investors like Fannie Mae, Freddie Mac, things like that. So a lot of people are familiar with that type of loan. We have those loans. So if anyone has questions on that too, please let us know. But we're here to talk to you about some of the programs that maybe you aren't aware of that we have out there. There are government loans, which we participate in those as well. USDA, which is Rural Housing Development Loans, FHA loans, we have all of those. But our specialty loan that is a premier bank product is called a community mortgage. And that community mortgage loan came about to help with community reinvestment. We wanted to do something in the community that would help people get into a home that either have people with low to moderate income, or the house itself is in a low to moderate income census. So for both of those. And we found that some of the government programs and some programs that we had out there, it excluded different areas, like the USDA is another 100% financing product we've had, but you cannot do it in the city of Adrian because the population is too big. It's called the Rural Economic Community Development Program, and it wasn't considered rural. So we had to come up with something because there's a lot of need here. And that's kind of history. That's where this kind of stemmed from originally. So the program that we put in place, it is just a premier bank. So this is our program. We keep these loans in-house. You're not dealing with an investor, Fannie Mae or Freddie Mac. We at our bank have to service our loans, whether you do conventional or this type, but this also means that you would always deal with us. You may have heard some large banks, or when you do finance with them, you might close your loan with them and then they sell you off. So a month later, you get this welcome letter to here's where you need to make your payment. Can't call that original lender. They don't have your file. They don't have your information. We at the bank, we keep the servicing on almost all of our loans. The only one we've done is FHA. But we retain the servicing because we want you as our customer. We want, if you have questions, we want you to contact us. We get contacted all the time for things that maybe aren't our area, but that's what we want you to do is call us. And if I can't do it, I might be sending it down to Michelle, and Michelle's going to send it up to us, or open your accounts or do things like that. So if you have a question on your payment, you don't think something looks right, or you just don't understand it, you've got a face and a person to walk into. So we do service these loans. So all of these loans that I'm going to tell you about, you can always work with us. So this community mortgage program, it is 100% financing. And that's one of the big benefits of this. You can actually borrow the full sales price of the home. So if you're buying a home you see a home for $100,000, you can borrow $100,000. It's not going to require any down payments. The one exception is we do allow duplexes. So if you found something where it was a duplex, a multifamily, is going to require 5% down. But if it's just a single family home, you can borrow 100% of the financing. So that's one of the few programs other than USDA that's out there that we have where you can borrow the full sales price. The other really nice benefit of this loan is it allows what's called a seller concession. And a seller concession is where you can ask the seller to contribute toward your closing costs and prepaid items. So normally when you buy a house, you would have a down payment. In this case, you don't have any down payment, but you still have costs to set that loan up. The closing costs are things like your appraisal, your title work, your reporting fees, flood certifications, all of the outside services and vendors we have to use to get that loan in place. That's considered your closing costs. Your prepaid items would be things like your first year homeowner's insurance, setting up what's called an escrow account for your taxes and insurance. When you first close and buy a house, we have to fund that account. We have to figure out how much do we need to put in there to start it with. So if we're escrowing, and what an escrow means, and please, if I lose you or you have a question, just say, hey, what is that? An escrow is where we will pay your taxes and insurance for you through your house payment. So when you make a payment to us, you're gonna make your principal and interest. It's gonna include your principal and interest, so your house payment portion, your property taxes, and your homeowner's insurance. And there's no tricky formula to it. You just divide by 12. So if your homeowner's insurance is $1,200, we're gonna add $100 to your payment for insurance. If your property taxes are $2,400, we're gonna add $200 to your payment for the property taxes. So we're just taking that money, you're making one payment to us, when we receive it, we're putting that into a separate account so that as your tax bills come due, or insurance bill comes due, we're gonna pay it for you. So you don't have to all of a sudden at Christmas time go, oh, I have to come up with $1,200 to pay that. You know, it's just you're paying a little bit every month. So that's what we're calling a prepayment. So when I say that the sellers can help contribute toward your closing costs and prepaid items, that's those items. Most conventional programs will allow up to a 3% seller concession. So again, just using easy numbers, if you were buying a house for $100,000, they would allow $3,000 of that to be paid by a seller if they agree to that. With this program, we allow up to a 6% seller concession. So if your closing costs are higher and maybe you've got your insurance is a little high in taxes, you might need $5,500. In that case, you could ask the seller to contribute all of that toward your costs. So this is the one program that we have. If you work it right, you can get into it for nothing.
What if the closing costs don't equal the 6%?
So and it's great that Nikki asked this because she's an agent, because I was also going to explain the other piece of that. Keep in mind, when you're asking a seller to contribute that is coming out of their funds. So I always say, when they talk to people, you can't expect the world. So, you know, sometimes you might hear, oh, the house is listed for $100,000, but I'm gonna offer them 90, and I'm gonna ask them to give you 6% back, and I'm gonna do that, and this person's getting nothing. So if again, you're offering 100,000 and they agree in your purchase agreement to give you up to 6% toward the closing costs and prepaids, that's like them getting 94. This is going to come out of their funds, but the key is up to. So that's where we will help based on the house and what the taxes are, help you estimate roughly what you might need, because they cannot give you money back. So if in that case, they agree to give you that 6%, they're agreeing to give you $6,000, but your items only total $5,500, that's all you're gonna get. So just kind of keep that. Is that answer your question? So you're not, yeah. So with that, this depending on taxes and insurance and the sales price of the house. So everything's relative. I mean, if you're buying something for $50,000, then the 6% is $3,000. Well, that certainly is going to be enough to cover the closing cost piece, but depending on what tax and insurance are, it might be a little shy of that. Which brings me to the next thing. This program also allows gift funds. So gift funds are, you have a qualified source, and what we consider a qualified source is dad, aunt, uncle, brother, sister, someone interested, an interested party, fiance, not my brother's friend's cousin. You know, it's got to be someone that's got an interest in you. They are allowed to give you money. So say again, you're short $1,000 and they want to help you. We just have them sign a letter saying they gave it to you. It's not a loan. They give you those funds, and that is qualified. So again, you can get into a home without any of your own money in certain cases, in certain situations.
Just to clarify, that's basically like close family or relatives that like, not like a super extended like family, basically. It's like for
You know, it depends on how far out they are, but yeah, it does have to be realistic because they're saying they're giving you a gift.
Gotcha.
And that's kind of the key, you know, would your neighbor's brother just give you the money without you having to pay it back? Probably not. Would maybe an aunt or someone, yeah. Now, do some people pay it back? Maybe, but for our purpose, it's a gift. So they've got to be willing to say that they just gave you those funds.
Thank you.
So that really helps you get into a house. So a lot of people, when they come in for us or to us to do a pre-qualification, I'm still surprised at how many think they need tens of thousands of dollars. They go, oh, we're just getting ready, but we only have 20,000 saved up, so we're probably 5 years off. It's like, oh, no. There are programs out there where you use this. So I mentioned it's for low to moderate income borrowers or properties in census tracts. So the income piece is going to be based on the area that you're purchasing the house in. And it's 80% of the area median income. And so that's something you can just go right out into website, look up area median income. In Lenawee County, I believe it's about 56,700 or 56,000. As long as your income doesn't exceed that, that would put you into that low moderate. But we would look it up based on whether you're going to buy the house. Now that is also just at the time you get the loan. So I don't know, some of you may have heard of programs out there that were very popular, where every year you had to submit your income and they may subsidize your payment. So you have a lower payment, but as your income goes up, they're changing your payment. That is not the case here. Once you have the loan, it's done, it's fixed, it's the principal and interest, the payment piece of it will not change. You do not have to resubmit income. So if you're making 50,000 today and next year you get an $80,000 job, your loan is there. It does not affect you in any way. So now the other piece is the low to moderate census tract. And you can go out to a website. It's a geo site that you can plug in an address. So anytime you find a property, we can plug it in. If you think, hey, my income's too high, but I'm looking over here, and we can see if it's considered low to moderate income, or census tract. And then it doesn't matter what your income is. So it helps that too. And that helps to buy in certain communities as well on there. The other advantage of this program is it's the one that we have where you can potentially get approved with the least amount of credit. So we see that a lot now, and I'm actually seeing it more and more where people are they are paying cash and they don't have anything recent in the last several years. They just don't have credit, or a newer borrower that they just haven't established anything. So if you were to go conventional, in some cases, because again, they're backing off on a little bit of that too, but sometimes you don't have enough credit to give you a credit score. And a lot of those programs are so credit score based. You gotta have a score, you gotta have something out there for them to do it. This one, if you do not have a credit score, meaning you just don't have any credit, but we can show that you had something out there that you pay on for 12 months that you paid. So it can be your rent, your utilities, a cell phone bill. It could be what we call non-traditional credit. We'll use that in more. Or if you have one trade line that you have at least 12 months history. So one credit card, one item that you had out there that's 12 month history. You don't have to have a balance on it. So a lot of people think they have to carry balances. There's some, no, you just have to show that it's been active. You've used it, paid it, and the history has all been out there for 12 plus. So it's kind of an either or thing. So that really helps a lot of borrowers, a lot of newer borrowers. As long as because a lot of even some of the kids nowadays, they don't have a lot of established credit, but they might be paying their own cell phone bill. Maybe it's in their name. Things like that. So we can use that utilities in items such as that. Let's see, some of the other benefits of the program is medical collections. Sometimes people have some medical collections on there. If they're minor, we don't necessarily have to have them paid off, as long as they haven't hurt your credit score too much. And I'm not sure if you're aware of like some of the changes in the credit reporting. we're not seeing as many of those small ones on there anymore because that's fast where they can't. Not gonna be putting some of that on the report, so that's gonna help people down the road with that too. Let's see, I like to point out job time. A lot of new borrowers or people that we talk to, they think the old days where you hear, oh, I have to be in my job for 2 years, you know, before I can get something. So I've only worked there for, 6 months. That is not really the case any longer. What we're gonna look at is, does it make sense and can we show any history? So, and it's different for different people. If you are just out of, maybe you just graduated as a dental hygienist and you are now in the working world, but you were in school. And you went from maybe not working at all to now I have a salary job that's here. We can show that you just graduated your certificate and you're working in your profession. You don't even have to have a 2-year history anywhere. We can use that. If you have bettered yourself or you've got an established employment history, we're not going to penalize you for bettering yourself or changing jobs, as long as we can show it's consistent. Like maybe you work someplace and you were, $8 an hour, and this one's going to be $12 an hour. As long as it's full-time, hourly or salary, you can use that right away because you went from one to the next. Or maybe in some cases, people take a little bit of a pay cut, but they were driving 50 miles to work. And now they got something a little closer, that's fine too. The things we're looking for, stuff like that. Now, if you are a job hopper where I worked for this place for a month, I was off 3 months, I went here for 2 months, I was off 6 months, I went here. That's the stuff we really need to show more of it in history of employment. But we're not gonna penalize you for the other things. If it is a job though, I like to point out, if you're working in something that is a commission job, a seasonal job, or a part-time, that's where we do need a longer history. That's kind of where some of the 2-year stuff comes into play, because we have to be able to show an average. We have to figure out, if we took just what you were using or making right now, this might be your really busy time, and then for the next 9 months you don't work. Or this is your really slow time, so we have to average it. We need to have a little bit of time to be able to average that. So commission, part-time, that's going to fall needing a little bit longer history out there. Any questions so far? Yep.
Is there a cap on the loan amount that you can get?
No, as long as you qualify income-wise. So I'm glad you read that, because that'll take us to what we call your debts versus your income ratio. And that's really what we look at. We're going to look at your debts, and what we are considering your debts are your monthly payments, but excluding like utility fees. So we're looking at car payments, credit cards, personal loans, student loans, that type of thing. We are not including your gas, electric, daycare, food, things like that. So we're just using your monthly installment debts, revolving debt, those types of things. We take your minimum payments. So you might have a credit card that, you always pay $100 on it a month, but you only have to pay $20 on it. We're gonna use the 20. You can pay as much as you want, but we're gonna use the 20 when we calculate your debt to income, because that's all you're obligated to pay. You don't have to pay that. So we're gonna look at your debts, those types of things, and add your house payment to it. But your house payment's gonna include your taxes, your insurance, and the principal and interest, the payment piece. We add that together and divide it by your gross income. And that's what we call your debt to income ratio. For this program, 43% is the cap. With the exception, we can go up to 45% if we can document and prove that your new payment on the new house, that you were paying more than that prior to. So if you were used to paying $800 of rent, But, this new payment's gonna be $700, but it puts you at a, a 44.5 or 45% debt ratio. We can go that high. Other than that, it's the 43%. And I always point out to use gross, not net. So gross income is, or if you are $15 an hour, 40 hours a week, 52 weeks a year divided by 12. You might gross $500 a week, but you may only bring home $300 a week because your taxes, maybe you have a 401k taken out, maybe you do other things. We're not going to use that 300, we're going to use the 5. That's a gross. And that's also the reason why we can't go 100% of your income, because you really aren't bringing 100% home. Capped at that 43, because of that. We're always going to use your gross. So a lot of times when I talk with people on the phone, if they don't come in and sit down with us, I'll ask those questions and then I'll go, okay, do you have your pay stub sitting in front of you? Can you read to me what that says? Because a lot of times they're looking at the bottom line. This is, oh, yep, I get $526 paid every 2 weeks. But you actually made $738 every 2 weeks. So just so that we make sure we get done. And we also look, what are you comfortable with? So, I get a lot of people that come and go, how much do I qualify? What's the maximum? What's the max I can go? And I always say before we even do that, what are you comfortable with right now? Let's start with that. And then from there, once I do all that stuff, I'll know there's plenty of wiggle room. Oh, you could go much higher if you chose to. Or, that's a little high, we need to adjust it down, because we never want to put someone into something that they're not comfortable for. If you say, I want to keep my payments around $600, then we're going to kind of do some estimates to try to keep you as close to that, because we don't want to give you $1,000 payment if you want 600, because we don't know your lifestyles. I have worked with people that have had very high income, and they eat out every night, they spend lots and lots of money, and their budgets, they can't do as much as the person that makes, a quarter of what they make. But because of their lifestyle, they're happy. We never want you to hate your house. We want you to love your house. And so we don't want you to be house poor or get into it and go, I can't do anything else. We want to make sure it's a great experience and you absolutely love it.
So if somebody comes in and wants to, ask these questions and what do I need to do? Like, do you offer like the financial counseling for that person to like get them to where they need to be to actually in that house?
Absolutely. And that's what we call it, a pre-approval. And our pre-approvals, I always say, ours means something. You could go online. You can go online and you can do a pre-approval through some of these online companies. You're putting your information, they spit it out, go, you can qualify for this. But like I always say, garbage in, garbage out. All they're doing is looking at the numbers, and again, they're not there to ask you, is this accurate? Is this correct? They haven't seen your pay stub. So, because the opposite happens sometimes where people overstate their income. They might be just looking at their W-2. They divided that by 12 and said, here's my monthly income, because that's what I made last year. But what they don't see is, but in there was a one-time bonus of X amount, and I had tons of overtime that year, and I had this and I had that. So then when they go back to some of those places, it's like, we can't do that, So when we do our pre-approvals, we treat it just like you're buying your house now. We're going to have you come in. We're going to have you bring your financial stuff. We're going to put the application on the system. We just don't put an address in. We just do a mock one. We'll pull your product so that we can see, are you ready yet? Or there's some things that you need to work on. We'll do all of those calculations so that when you leave, you know where you stand, and it's a good approval. It's not, just swinging it, because we also, like for Nikki's sake, the last thing we want to do is give a pre-approval letter and then have someone make an offer on a house and that seller thinks they have a buyer. The agents think they've got a sale going through and then get 4 weeks into it and go, oh yeah, that's not gonna work. So, we don't wanna ever do that, right? That just puts a lot of stress on. So,
Do you have any bilingual services? So like if somebody comes in and only can speak Spanish?
you know, we have had a lot of clients come in and it's up to, we do have some people in the bank that can speak very well Spanish. And we can't always pull them in. In my past experience, I've had a lot of people bring someone with them.
Okay.
So, and that happens a lot. I've had a lot of families where maybe the daughter comes with the last, and I just say that because that's the last one that I worked with. The daughter spoke English very, very well in both, and they just translate it in there. So if we needed to get someone in with us, we do have people in the bank. We just have to schedule an appointment to make sure we can get someone over there. If not, they're welcome to bring anyone they want. Some people bring the kids will bring their parents to help, just so you have another set of ears on it.
Well, and so to go along with that, like I know, so I work for a nonprofit and they work with everybody is low income to qualify for the school. And so what we see a lot is a lot of the families living together, like the extended family. So and many of them, they're all working. So like, would you look at that and look at everyone's income that is going to be buying this house together?
Yes.
If they were going to buy
As
it
long as
together?
they're gonna live in it together, yes, but
Okay.
so, but we also have to look at, make sure that does not disqualify. them.
Right.
So, yes, but absolutely, and we do have that, I mean, we've had where, kids have mom in there, so we might have my mom's still working, or we're using personal security in theirs, and they're all three literally living there together. We've had, parents and the two kids, husband and wife there, and that's fine. It's whoever's gonna live in the home as their primary residence. Yep. Yep. So we'll use any income that you and the son man loan. We have to look at household income. So if we have, say, a married couple, they're living, they're married, not separated or divorced, and they only want to put the husband on, that's fine, or the wife on, that's fine. We're only going to use their income to qualify for a payment, but we do have to show household income to make sure their household is. And that actually is happening more and more, I think, especially with the expense of things and. So absolutely. we can do that.
And then these loans are a little bit flexible, like you can add on a couple more years at the end, just to make sure that it's feasible for the person that is doing this, right?
And these are 30-year fixed. So it's a 30-year, yeah, so I apologize, so I don't think I even mentioned that. This program is 30-year fixed, no prepayment penalties, so you pay off anytime, you can pay as much extra time as you want. And it's a fixed rate. So the only thing that's going to change year to year is your escrow portion, because your taxes and insurance are going to adjust. But the house payment, it's not a balloon, it's not an adjustable rate, it's a fixed rate. And the rates are very comparable. Today, it's the same as what a conventional rate is. So this is not a program where it's priced higher. It's typically the same and sometimes lower, just depending on what the market's doing out there. Because this rate doesn't change as often as we see conventional. Those could change daily sometimes. Do you think that I get up here and I always say, I'm gonna have, you guys gotta talk to me, and I never stop. I don't, that's just the Italian in me, my hands go flailing and I never stop talking, so I have to sit on my hands to be quiet. So, any other questions that you can think of? That we have the pre-approval process, just so you know, completely free, not charge any fees for this, we don't do anything, and then in like what you asked Angie, sometimes, we sit down and, if we can't do it, we're not just say, oh, no, denied, can't do it. That's part of what we do is the coaching. Let's look at what's causing us to, have a delay on it and what can we do to fix that? what do you need to do? Sometimes it's a quick fix, sometimes it's okay, get a little more time, or why don't you work on getting you a secured credit card or get something? And then we just kind of keep touching base, we get full, I've had some people that, we've met every 3 months, every 6 months, and a year later, a year and a half later, 2 years later, I've even had people come back and they're ready. So it's, we definitely, so that's part of the coaching piece of it. With this program, we have an online home buyers class that they take, and that's just through our vendors like our PMI and that. And that's not, we're gonna go more in depth, but it's just something that's nice where you can go on. It's again a free class. It takes about an hour. Do you guys remember doing that?
Yes.
Yeah, and it just talks about just some home ownership things and.
You read it slowly, it might take a little bit longer.
Right, and then you just kind of follow and things to think about, and then you get a little certificate.
I'm just really grateful that you do this because I feel rent is getting so expensive. I don't know how people do it because I bought my house when the market was really crashed. And I know what I pay a month for a mortgage is less than what most people are paying for rent in the city of Adrian. I'm paying less for my mortgage because, I just bought my house at the right time, but I just can't imagine, so I feel like at least if they were making that payment towards a house, then it's an investment and they have something later. And I just feel that this is so invaluable and like people really need this because rent is pushing them, the rent costs are pushing them out of their places.
Rent is going so high and the number of people that are shocked when you your payments on, because sometimes people will come in and say, I'm looking at this particular house and I can run taxes and things and kind of look at it and go payment, they go, that's less than what I pay. And that happens a lot. It's like, yes, it is. Yeah.
How many people do you process through this program?
Oh, gosh, it's my favorite program, to be honest, but it goes in spurts. It just depends because it depends on what the market's doing out there right now. And Nikki can probably attest to this even better than I do. When you're in a market where inventory is very low, then everything slows down. Or if you're in a market where rates are higher, so they prepped up over this last year, things slow down for that too. So it's availability out there, it's who's looking out there, but I couldn't, they widely do a lot. I mean, this is not something where it's a one time a year type program. I couldn't guess, because we've had years where I might have 20 loans a month close and 5 of them are this type. It just depends.
What's been your best year? Numbers.
Well, in this specific, I wouldn't be able to break it out, but because the other thing too, when you're talking dollar amounts, the price of the house changes. So back many years ago, 2000, when the rates started going way down there, we had loans like, gosh, I think my best was $38 million in a year. Those loans. And then you have years where it's 15. So, but that doesn't mean we did less. It just means sometimes the price is different, because, and you can never tell. I mean, sometimes I will have a mix. I'll have where I just finance, a $700,000 house for someone and a $25,000 house. So the price is, so even the numbers, even the millions, it's not units. On average, I've been there 29 years, so I have so many different years in there.
Well, I'm just wondering how many people are actually benefiting from the program. I'm wondering how often we should do this kind of seminar instead of once a year, because we've been doing once a year because of the pandemic. But if this is something that we should be doing more frequently to get the word out.
I think to get the word out, it's nice. And I think especially if we get like the real estate scene, if people start saying, okay, we're getting listings, we're getting a lot of listings out there, we're getting a lot of buyers out there. Then I would say even upping it more for sure. If you're in a market, it's kind of hard right now. And that's why even Michelle's here to talk about a piece that I think might even be more popular currently, because it's hard, depending on the value of the home people are looking at, and you can attest to this, but if you to find a house at 60,000, that's a really nice home, they're just gone. They just scoop them up. I mean, they have people, I tell people all the time when I do pre-approvals, because sometimes they'll get advice from family members or parents, don't let them rush it, don't, take your time and think about it. You certainly do that, but it's not like those days where you go look at a house and say, okay, I'll get back with you next week, or let me think about it, because it's not there. I mean, we've had people, my mother's a great example. Their sign went in their yard and they sold it 2 hours later. I've had clients that have driven by a house as the agent was putting a sign in the yard and stopped to see if they could run in and see if I bought it, So things, when you find nice homes priced right, they just go quickly. So you gotta just be ready to nab it, and that's just a product of inventory's down. Home prices have gone up and inventory is down.
Of course, it depends upon the person, such as you mentioned some coach, but how long does it generally take for the process to get qualified?
The qualification piece of it would, we usually ask that you bring in your financial stuff and really even the basic, just a pay stub, last couple of years tax return, and a bank statement or something where you think if you're going to contribute money into it, where you got that. And in most cases, right while you're there during that appointment, we say, yep, you're pre-approved, for X amount. You can start shopping. If your agent needs something, let me know. We'll send them a letter, that type of thing. So that's not weeks down the road, or you're not sitting there wondering. So I can't say that everybody walks out with that, because every once in a while we'll have someone that's got some little weird, unusual thing that it's like, okay, let me do some digging on that one, or a weird lien out there or something that we've got to find out how that's going to affect things. But no, the pre-approval process, when you come in, we just do it right on. And we usually, we can do phone appointments, we can do it in person. A lot of times when it's the first home, people like to come in, because I'm a visual person. I like to see the things, because when you're talking on the phone, it's, you can't, and even ourselves, we can't read like based on your facial, are you understanding it? Or, let me rephrase that a different way, or let me show you or something, so, but we'll do however people would like, that's convenient. I mean, I have had over this last year more people than I think I've ever had from moving to Michigan, which is great, from out of state. And so it's not realistic to ask the person from Colorado, would you like to come in for like pre-approval? So sometimes a phone one is just one for people, and that's fine. We'll do whatever they're comfortable with, but we just do it that day. We just ask them to call and make an appointment so that we make sure we set enough time aside, just once you're there, it's all about you.
I'm in a similar situation he is, but past month trying to find housing, and it's like housing. A lot of people are trying to find homes right now. There's big homelessness going on, and like I had an efficiency I was lined up for, and someone swooped in with $3,000 and triple paid for the rent and got it immediately. Yeah. So programs like this is actually very phenomenal. And word of mouth is very important, because that'll help people that are trying to find places that are desperately looking, but think they don't have the finances, they have no hope whatsoever. It'll actually help out a lot better. This personally has given me a lot of hope, and I'm extremely excited to pursue this, because
that
it's
is
good.
what we were hoping.
Thank you.
Oh, I wanted to know what you were referring to.
With Michelle? Yeah.
Yes.
So And then if you think of other questions, we'll be here. We've got our cards back here too, just so you know. So even if you think of something later, please grab a card. We put flyers there. Call anytime. We've got all of our numbers there, and we're happy to walk you through or explain more if you didn't think of something. So what Michelle's going to talk to you about is ours for a new purchase. You're buying a house. Let's do that. Michelle is going to
After you own the home.
After you own it.
Yep,
So
so this is
investment.
not for renters, this is for homeowners, right? We have a program, it's called the Better Together Home Improvement Loans. And we have 3 different types of loans that you could potentially qualify for. Now, these loans, they don't have any fees whatsoever, so there's no closing cost. They're unsecured, we're not taking a lien position on the home. We're just asking that these funds, at least 50%, go to home improvements, right? So a lot of the qualifications fall within the guidelines of the community mortgage. So again, your income has to fall below the low or moderate income census tract, which you can get on the line. I think it's the geocode.com, I believe the website is. And then you just put your address in there and you do a search. So it'll give you the income guidelines. And if your home falls in the low or moderate zone on that geocode website too. So it's either or. So either your income falls or your home falls in those guidelines.
Just
Then-
like ours.
Yeah.
So exactly how it is.
and then you could potentially qualify. So again, there's no fees. Our first one is our Better Together Energy Efficient Loan. So this is only a max of 2,500. So this is energy efficiency, like updating your windows, insulation, maybe a hot water heater goes out. So the interest rate on that currently today, now interest rates are subject to change at any time, that's 5%. So we can go 12 months to 60 months on that. The next one is our home improvement. So this one's a great one. This one's a hot one. This is the one that a lot of people utilize. The max is $10,000. We can go from 12 months to 84 months. And that interest rate today is at 7%. So to give you an idea, if you do the full 10,000 at 7 years, your monthly payment's going to be about $151 and some change each month. So very affordable. Again, we just ask that you use 50% of those funds to go towards home improvements. And they have to be home improvements. We don't want extras. We don't want you to, well, I'm going to put in a hot tub. No, sorry, that doesn't qualify. It's got to be something that's going to improve the house, right? And then the second one, if your income doesn't fall or the home aren't in the guidelines of the geocode, again, you could use this. The interest rate's a little bit higher. It's at 9%, same max 10,000. This only goes up to 5 years, not 7 years. So the payment would be a little bit higher. But again, home improvements, it's unsecured. And then our qualifications are a little bit different with the income and the credit score. So our max debt to income ratio. So just like Fran said, you take your gross monthly income and you divide that by your monthly payments that show up on your credit report, right? Like your minimum payments on your credit cards, your auto loan, your mortgage, anything that would show up on your credit report. We want it to be at or below 45%. So normal loans, like our home equity line of credit or our home installment, that's 43. So we're giving you a little bit more wiggle room on that payment. And your minimum credit score, 620. So the normal loans are 661. This one gives you additional wiggle room, 620. But great products, really great products.
The nice feature about this one is like the loan I talked about, it's 100% finance. So you have no equity. And so
Yeah.
sometimes even a year later, probably not gonna have a lot of equity. Most of the home equity loans, you're gonna need 20% equity to even get into something. So when you buy a house like this, and you guys use this, you might get something and your well goes out or your furnace goes out or something happens and you don't have any equity in the home to do a home equity. Now, you could always look at doing a personal unsecured loan, but
your
most of
interest rate
those,
is high.
yeah, what's ours?
17.99.
In 2 years. So then the rate's high and the payment's so large. So anytime you can use some type of collateral, that helps. So this is kind of like a loan that you're using collateral, but we're not.
Yeah, we're not taking a lien.
We're not gonna take a lien on it, so it doesn't matter that you're at 100%. You know, we're still gonna do this loan, you just have to own the home.
Yes, you have to be the owner of that home.
It's
Yeah.
more realistic rather than setting them up with failure with a 17%.
Right, exactly. Yep, and that's what these programs are for, right? We want to set people up for success and be homeowners and, yeah. This particular, all three of these types, they're quick turnaround. I mean, we'll take your application. If it's an emergency, your furnace just went out in the middle of winter, we could put a rush on it. We could probably, in a perfect scenario, get you a check the next day if you qualify. So I like to tell my clients 4 to 5 business days. We can get it closed and cash in hand. So you're not going through that home equity process where you're waiting on all those orders, the title, the flood search, the appraisal, where it takes 3 to 4 weeks. So that's a plus too. Does anybody have any questions on the product?
We do a lot of these also.
We do. What's that?
What are the interest rates set on the 3 different?
Yep, so on the first one, the energy efficiency, the max 25,000, right now it's at 5%. Or excuse me, 2,500, thank you. The Better Together Home Improvement, the 10,000 max, that's at 7%. And then the unsecured home, so if you don't fall within any of the census codes, income, or the home isn't in the zone of the census code, it's at 9%.
That's still 10,000,
That's, yeah, still 10,000, but it goes
5
every
years.
5 years. Yeah,
5 years instead of 7.
yeah,
Or 2 years, but sorry.
Right,
Was
yeah,
2
people-
years.
it's whatever you're comfortable with, you know, a lot of times again, I'm on the coaching side, I want people to be comfortable. A lot of times I'll say, go the longer term, go the 7s, you can
Yes.
pay like it's a 2,
Yep.
you know? You can always pay extra because you don't know if you go 2, what if, you know,
What if something
6 months
happens?
later, something happens, you need something else, you just kind of put yourself in a position.
Yep.
Life was like,
You can always pay more, but not less.
yeah, and there's no prepayment penalty, you can pay it off never. Yeah, and again, there's no fees. Normally, we have a loan fee of $195 plus all of your orders go on top of it, so you're saving without having to pay any of those fees as well.
too nice.
Yeah, this is another product we've had for years. We put
Yes,
it
it's a
together.
great product.
I think
We use it a lot.
initially it was put in for people that something bad would happen, and it's like they couldn't get a loan at a place. We need to help them stay in their house and get huge repair stuff.
Yeah.
Because these are critical repairs, and that's kind of how it started, and then it morphed into a little bit more as we.
Yep.
As we went on.
We get a lot in the winter, especially. My heater went out. I've got to have a heater. Yep, I got a great product for you. Let's see if we can get you in.
And it doesn't matter, I mean, it will happen on I'm a pretty busy one. My house is only not even 11 years old, and I've had just about everything happen. Hot water heaters.
Yes.
What's in
My
Murphy's
house
Law?
literally-
There's problems, growth problem, you know, so
If
it
it's
doesn't matter whether it's a newer home or 100-year-old home. It could work fine today, and tomorrow it doesn't work at all.
Or the same day.
Never a good time.
Yep.
That's really a good program. A lot of people don't.
Yeah,
You best live a monkey spread the word. I mean,
Yeah, and that's what we're, here for, because these are things that we don't advertise, but it's more word of mouth. It's, if you know somebody, or,
We do know somebody,
yes, absolutely.
whether they're willing to do it.
Yeah.
That's another question.
it's kind of scary sometimes, right? Though, walking into a bank and trying to get a loan for some people, especially when you never been taught about equities or
Right.
credit or nothing. But with the way you guys have this laid out, it's very informative, straightforward, friendly. You're not just throwing numbers at people and being aggressive. You're actually sitting down, working with them, and it's for people with anxiety like me. It's actually more welcoming to come in because you guys are willing to give the info rather than be like, "Here's all this for you, figure it out, get out."
Yeah, no, we sit down with you guys. We'll talk about what it is that we're looking for, what could potentially hurt you and your credit. Yeah, so we want you to succeed. We want to set you up to
How are you successful?
Because it benefits Adrian way too, right? Because if you improve the home, now the home's looking better in the future. You have a home in the city. And in theory, it also attracts people around because now the city's looking better, houses looking better.
You don't have that blind.
This is really a great thing you guys are doing.
Yeah, we're just trying to put money back in the community.
Yeah, it's a good thing to do. It really, honestly. So thank you.
Okay. Do you want to add anything to that, Bill?
Just that when we do create, and I know Fran does this too, but I always tell people that these are the taxes today, this is what you see in the end. But a year from now, they're gonna adjust, so I don't want someone a year from now to find out that taxes went way up, because I've seen some pretty big change, someone's owned a house a long time. The taxes have been capped, so next year, based on that sale price, they're gonna go up, and I don't want someone to not know that, they need to know that. They might not remember, but at least.
Right, and we go over that too, when they look at homes.
They'll give you lots of info, because I definitely forgot some of it, because there was so much, but they're great.
Embarrassing.
My adult son resides with me, he'll probably want to keep for a while, but he doesn't bank with Premier, I do. But, I mean, doesn't matter.
Yeah, it doesn't matter, you don't have to, we love for you too, but it is not a requirement.
Nope. And then the community mortgage loan, is that in city or rural or
That's
is it
it.
kind of run away?
There's not a restriction. I mean, I say not a restriction. It's gotta be within the states that we do business, so, and we actually are big in Michigan, Ohio, Indiana, Pennsylvania, and we do have a lending center in West Virginia. At least those people, those lenders will probably handle that. I don't go to West Virginia.
So with like for instance, me, I've only ever used a credit union like TLC. Does that make a big difference? Like when going to a bank to apply for a loan, anything like that? Okay, because I'll admit I'm fairly new to adulting. I was a pampered adult boy, but now I'm trying to get my life together and get things together. And I'm learning about, credit scores and all this stuff. And like I said, the fact that you guys are so straightforward about this, it'll make it easier to actually set down a roadmap to actually be successful rather than just bumbling through things and hoping it works. Like, thank you. Sorry.
Well, if you need something, we'll be around. Enjoy the pizza and thanks again for letting us come in and talk. If you have people that you know that it might help, please, grab some of our cards, pass along. We'll sit with them too and walk through it. And we recommend this program a lot of times. When people come into us that know nothing about it and they're just coming in to get a regular pre-approval. If they fit into it, like I said, I love it. It's one of my favorite programs. And they meet those requirements. We always suggest this because the other thing I didn't mention is if you're familiar with conventional loans, a lot of those conventional loans, if you're putting a 5% down, if you're not putting 20% down, you have to carry this special insurance called private mortgage insurance. We call it PMI for short, but it's private mortgage insurance. This program is our own self-funded. You do not have PMI, which means that's money that's part of your house payment that can be shifted to buying, getting more for your money.
You cut out middlemen basically, where like there's not as many fees or mid.
Well, your payments are lower.
That's good.
Yep, so you can either.
Thank you.
Each of your programs,
What?
each of your programs are different. Do you have something in writing already set up online or something that you pass out?
I brought one. Yes.
So the flyers say that, because that's exactly what I was gonna ask.
Yes, I believe that flyers say no PMI.
Because I have 36 families a year that come through my school and a few of them own homes, but very few. And this is something that I know would really be a service to them. And if I could pass that out, at least get that info out.
Absolutely.
Yeah,
I think it does it says no PMI.
Okay.
It's gonna give people hope. Like I said, people that don't know about this and they it's scary. I'll admit, I get scared about stuff like this, but when people are like doing what you guys are doing, it's really a lot less scary.
Yeah, and it's nice too, because again, that pre-approval process, even if they're not ready now, we can explain how it all works and what they need to do to be ready. And people are very conscious that mean, I've had people that I've done a pre-approval for, and then if they're not quite ready yet, and they'll call and go, hey, I was thinking of buying this car, would that change things? You look at it, yeah, how much is that payment? Yes, you know, so it makes them think before they do things too, so that they don't put themselves in a position if they weren't planning on doing anything for a year, that all of a sudden they come back in a year and, oh, now you don't qualify because you took on another $600 in car payment, you know?
Transparency.
So it gives us time to, you know, just counsel.
Get the house first.
Yeah, yeah, exactly. Yeah, I know, yeah.
Thank you guys so much.
Yeah, you're welcome.
I'm glad I saved that.
Are there any further questions?
Actually, yeah, where's Premier located?
We have a couple offices here in Adrian. One is across from the Christian Family Center. Our other one is right across from the courthouse, right on the corner of Main and Maple.
Okay.
We have Tecumseh. We've got one in Tecumseh across from Bushes. We have Rincey, Hudson, an office in Hudson. Those are our, and then we actually have like loan centers up in the Ann Arbor areas too. Those are our Michigan offices, and then we have
Thank you.
Yep, we're the former bank of, we used to be Bank of Lenawee.
Okay.
So, yeah, that's. And First Federal, yeah.
And First Federal.
Yeah.
I was trying to remember what the word was.
First Federal, yeah, so Bank of Lenawee and the First Federal, and that Premier name is just a name change from First Federal.
Gotcha.
That's not a new thing.
Not a new
Yeah,
booking group.
we just changed the name because there's so many First Federals, other variations of First Federals.
Exactly.
That was just.
Thank you so much.
Once again, thank you so much to Premier Bank, Fran, Michelle, all of our team. Thank you so much for being here. And thank you so much for giving this information. It's you a few times and every time we're ready, I appreciate it so much. And thank you so much to the Adrian District Library for allowing us to use their area. I think this has been a very welcoming, open area and perhaps a little bit more relaxing than some of the other venues we've used in the past. So yeah, thank you so much for everything in making this happen, and especially to Fran and Chelsea for their work in their respective organizations and helping make this possible. I hope we all got some information out of this, and also thank you to Nikki for being here and providing a little bit of your perspective. I greatly appreciate it.
Thank you, Joaquin.
Yeah, thank you.
Thank you. Good to know that you're doing good.
And Nikki's if you guys don't all know Nikki is a real estate agent. So Nikki is actually someone you would also want to talk to. So
Thank you for your help.
she's the one that can help you.
She's the one who helped us and she did a great job. She was very patient. She found us houses. I mean, it was.
Do the real
We had
estate
options.
agents know about this program?
Most of them get it out there, right? Yeah.
Yeah.
We get it out there.
This may be cheesy to say, but there really are just out heroes really out here still helping people not be homeless and like have a roof over their head. So thank you guys, for actually, caring about people enough to make programs like this. It means a lot.
And thank you all for attending. Please spread the word, because hopefully we're going to do this again next year in some way, shape, or form. Looking forward to it again. Thank you all.
Somewhere.